here, weakest momentum in U.S. markets going back to about October. So do we get a pick-me-up from some of those earnings coming through? NVIDIA, of course, fell 10% on Friday. Futures are pointing slightly higher today. And, of course, we have to talk about the NASDAQ too, Yvonne, and really where we go from here. We're down 7% from the peak. How far down do we go? We'll get these earnings, of course, this week coming through. Important week.
Yep, certainly that's one to watch here after what it was a pretty bad week when it comes to risk assets last week. Let's bring in our MLife strategist, Mark Cranfield, now. And the question of the day is quite interesting, too, Mark. When you talk about the tech sector, we were come off the peaks, right, when it comes to U.S. stocks. How important are these Mag 7 earnings to really justify whether this U.S. rally can continue?
Enormous. I don't think you can under-prepare the quantity of this week at all, really. And as David said, even before this week of earnings gets started, NVIDIA has already had a 10% drop in one day. Now, the importance of that is really looking at the retail sector, and that probably makes it a little bit scary for the institutional investors. So NVIDIA has become the most held stock, the most traded stock by the retail sector in the United States. And we know how powerful they can be. Talk about the tail wagging the dog. They've become a major influence in the US equity market, particularly since the pandemic. Now, why people should really be concerned is because before NVIDIA was the number one stock in the retail space, it was Tesla. And look what's happened to Tesla over the past year. It's just gone down and down, and the headwinds just seem to be coming. So even before the major companies start announcing the results this week, which is not NVIDIA, by the way, theirs is slightly later in the month, we've already seen one of the most important stocks collapse before we get started. So you cannot say that this is a huge week. If we get through this week unscathed, it could well be a turning point. Everybody will think it's blue skies ahead. But if not, this might just be the beginning of a very bad period for tech stocks.
Yeah, Mark, I was going to ask you because it's certainly, this constant debate, on what's more important for stocks. Is it earnings or the inflation story? And certainly with the Fed conversation taking place, 3 weeks of losses on global stocks, would you now be able to say, obviously, let's see what happens this week, will earnings be the key driver for equity markets from here, at least U.S. markets?
Earnings are far more important over a medium-term period for the equity market. The inflation story is a little bit of a nuisance, but what it really just means is that the Federal Reserve are going to delay interest rate cuts. They're not going to raise rates. No matter, there are one or two people have put the notion out there that the Fed may need to raise interest rates again, and we've seen yields back up slightly. That is such a high bar that traders can pretty much ignore it, particularly in the equity space. They're not going to be too worried whether interest rates go up 25 basis points or down 25 basis points. Rates, from their point of view, are around 5%. They're factored that in. The US economy is doing very nicely. It comes down to earnings. Are the individual companies really living up to the promise? Because some of these stocks are priced for perfection. And so any little wobble, you can see what happened to Taiwan Semiconductor last week. That was a stock that had been on a rampage, and yet even a slightly doubtful outlook and the stock plummets. So you can see you have to come in with earnings that not only meet, but your outlook has to be very positive as well. Otherwise, investors will hammer you.
Mark, I want to switch to the bond market, given all these big auctions coming up on the short end of the curve for treasuries this week. There's possibility of a 5% coupon on the 2-year yield. How likely is that? And how much, is 5% really that magic number to really kind of draw more bond investors in to buy?
It's certainly an important number, but it is probably just within the context of the overall yield curve. If you look at where we're getting some of the inversion is coming out, probably more significant is whether or not this auction actually steers the market towards a flat curve where the long end of the yields get pushed up further relative to the short end. Really, the next really big trade for bond investors is whether or not they can afford to be more negative on 10, 30 years compared to the 2-year sector. Otherwise, we're really just chopping around in the kind of range we've seen for some time. This is a huge auction week. There's a lot of bonds to digest for everybody, but traders are pretty good at pricing that in before the sales actually come through. So we'll probably get to the point where we absorb that auction numbers. We may well see the 2-year go above 5%. That's quite possible. But whether it goes slightly above or not is not really the big trade. The big trade is whether the curve can steepen and whether it can sustain that. A lot of people have been burnt already going in too early on the steepening play.
Absolutely. Mark, you've been writing about, and just to pivot to China, you've been writing about the Chinese equity market, the outlook for this week, and how perhaps the CSI 300 might find it difficult to shift into a higher rate. Just take us through your thinking there.
Yeah, you've got a lot of negatives piling up here. Again, the risk of sanctions is getting broader and broader as we get into the US election cycle. But it's not just for America. Of course, the Europeans are looking at various parts of the Chinese economy as well. And some of these drivers, things like electric vehicles, are fundamental to the outlook for Chinese stocks. And then you've got this false positive from the yuan. It looks as though the yuan is a strong currency. When you look at the yuan basket, it's actually been rallying pretty strongly for the past couple of months. Really, what's happened there is that by keeping dollar yuan in a tight range, the yuan has strengthened against most other currencies because the US dollar has been pushing them weaker. Well, how much longer can the PBOC really afford to keep dollar yuan in such a small range when the dollar yen is getting close to 155? If this week's Bank of Japan meeting is a non-event, and dollar yen really goes much higher, it's only a matter of time before the Chinese authorities have to allow room for the yuan to weaken against the US dollar. And that's going to be a negative across the board for Chinese stocks.
Mark, thank you. Mark Cranfield there, MLive strategist for us. Maybe we have the perfect guest with Becky Leo joining us later on in the show to talk us really how much scope the PBOC might really have to keep this fixing frozen at these levels. Mark also talked about EVs and how that's really contingent on what's been happening to this market, and certainly part and parcel to that story today is Tesla spending the weekend, and the big news, just in the slightest chance that you missed it, slashing prices for its cars across the US, in Europe, and in China. That's after disappointing first quarter sales. Really leading to the swelling in inventory ahead, of course, of earnings coming through as well. Let's bring in Peter Vercoe, our Global Business Asia editor. He's in Sydney for us. Peter, what do we know about these price cuts?
Yeah, they were pretty sweeping price cuts across the US and China, Tesla's two key markets, and also some price cuts in Europe. It started off in the US with the price of the Model Y and the Model 3 coming down. In China, they slashed the price of the revamped version of the Model 3 and across the entire lineup. It looks like the Model Y is now the cheapest it's ever been in China. And then that was followed late on Sunday in Asia time by discounts on what Tesla calls full self-driving in America. That package is now down to $8,000. It was originally $12,000, and clearly Tesla are trying to make a really big push on getting more people to take up what they call full self-driving or autopilot. We know that it's not quite there yet. It still needs constant supervision. But Elon Musk has previously said that Tesla really needs to nail autonomous driving to be more than just another car company, and really to justify the lofty market valuation that it has.
And Peter, I mean, just broadly speaking, this is the Tesla stock's down more than 40% this year. It's really kind of detached itself from this Magnificent Seven story. And, Elon Musk also canceling his trip to India now to deal with sort of the chaos. I mean, what does it need to do to really turn the ship around now?
Yeah, well, I think we've got the Tesla first quarter earnings on Tuesday US time and the earnings call. And I think that's really taken on great significance now, given the events that we saw last week. Everything, it started off with those swinging job cuts, 10% of their global workforce. We had a Cybertruck recall on Friday, and then obviously the weekend developments. And Musk, late yesterday, in a last-minute move, cancelled a planned trip to India this week, citing his heavy obligations at Tesla. So obviously there's going to be a lot of focus on this earnings call, more than we've previously seen. And I think what investors and analysts are really looking for now is some clarity on what Tesla's strategy is going to be moving forward. They seem to have ditched plans for a cheaper mass market car around the $25,000 mark and have gone what Elon Musk, rather colourfully called balls to the wall on autonomous driving.
Peter, thank you. Peter Verco there, our Global Business Asia editor, joining us out of Sydney. It's interesting, right, Dave, when you talk about the loss of fortunes for Tesla. I mean, you could see it in just the market cap that's just basically evaporated this year. And ExxonMobil actually is now overshadowed them in terms of Tesla, in terms of market cap now, I should say, which goes to show, right, when you have oil prices coming up, that certainly is helping the likes of Exxon. But Tesla is certainly in some sort of downshift gear. I don't even know how to describe it in car terms. But, what can they do this week? They're saying this week is kind of a make it or break it moment, really, for Tesla.
Yeah, well, we'll see with the earnings coming through as well. I put a question on X over the weekend. Would you buy Twitter at these levels? Not Twitter, Tesla at these levels, 50% down, and not a single response. And obviously, it's not a sample size of 1 billion. Said no. There's a lot of downside momentum in the stock. Breaking news out of China right now: the PBOC keeping the yuan daily fix steady. Number two is 1 and 5 year loan prime rates unchanged as expected at 3.45% on the one and 3.95% on the other. Fix on your screens. Also, your renminbi 725.35 against the US dollar. Right. Just ahead, in fact, we'll unpack this and what this means for rates and rate strategy in China. Standard Chartered comes along. Becky Liu, head of China macro strategy, joins us later this hour. Counting down to the open of trade, first one of the week, 14 minutes away. You're watching The China Show. Good morning.
DOJ or other authorities
could face bigger challenges.
That was going to keep Rain World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type